Good morning. How do we put this move in crude oil into the longer-term context? Obviously, adding back some perhaps geopolitical risk premium into the price, but is it going to be sustainable?
Well, as you know, Iraq is producing a lot of oil, and you know exactly where that goes is going to be a key point. Iraq is really almost, well, it's the fifth biggest oil producer in the world right now. And, you know, I think that significant unrest, which is obviously potential, is going to be a major issue. And additionally, as you know, Iran and Iraq combine to be essentially the fourth biggest producer in the world. So you have U.S., you have Russia, you have Saudi, and then if you think about the Shia, you've got a massive producer here with a major geopolitical event.
Scott, this comes at a time when crude oil was already kind of bumping up against the top end of its range. How do you see the trading dynamics right now? I mean, obviously you have, you know, kind of the supply-demand picture, which has mostly been about ample supply, and then you have the trading dynamics.
The trading dynamic, Mike, is, I think, what is interesting. And why is that? It's because crude oil has actually come back quite a bit since news got out. The high for the Feb contract was about $64 even. You know, we spent a fair amount of time this morning at $63.40 in that contract, which was up quite a bit, up 3.6%. But, you know, that is also the high that we saw in September after the drone attack against Aramco. So once the market saw that we were not going to spend some substantial time above $63.40, it came back, and it's continued to come back. So as far as the dynamic, I don't really think anybody should be hurt. Why? Because even at this level of about $63, we're still in the middle of the 52-week range. And then if you broaden out a little bit, we are still in the middle of the larger 2-year range. So add the fact that Russia has plenty of additional capacity. In fact, Russia has been chafing at the limits imposed by OPEC+. They want to produce and sell more crude oil, and particularly more distillates. We also know that the Saudis have additional capacity that they're not using, and that's going to be good for oil prices, or it's going to keep volatility low. And in addition, let's remember that Aramco got back online by the end of November from the middle of September strike. So there's plenty of supply. I would be surprised if we saw really extraordinary volatility. We're going to see plenty of volatility, but there's no reason to think that it's going to just be a shock.
Paul, let's talk stocks for a minute. Heaven forbid we see an escalation in terms of these tensions, in terms of this conflict, and maybe you do see some of that energy infrastructure embroiled in that. Which are the companies, which are the integrated oil majors that have the most exposure to the region and could be affected the most?
Well, Oxy, Exxon are both exposed, but I think the big point is that the difference between $50 and $60 is enormous free cash flow. And so we want to own these oils going into 2020. There's no question about that.
You want to own the oils pretty much across the board. I mean, it's interesting because, of course, the sector is down slightly. You have a lot of refiners in there that are not well positioned for this type of a move. But the exploration and production companies are up. So at this point, would you essentially bake in these price levels to your expectations for what the cash flows can be for the year?
I absolutely love the Permian players here. EOG, PXD, FANG. You know, these are really good companies now. And you know, it's just a reminder that we want to own U.S. oil, you know, and that's it, basically.
Scott, we had Sassad al-Husseini on earlier saying that he didn't think that U.S. interests in the region had been harmed by this action, or really threatened very much. Do you think the price of oil over the near to medium term is going to eventually reflect that, or do you think that's just one man's opinion?
We have to see what happens over the next week. As far as crude oil prices, I'll point out that Saudi Aramco was attacked on September 14th. Our market opened at the end of the weekend on September 16th. And then by the end of September, crude oil prices had given back all of the gain and were back where they were. So when it comes to purely economic point of view, I don't think that our interests have been substantially harmed. geopolitically, we're going to have to see. But as far as crude oil prices and supply, what it's going to mean for consumers of crude oil, I don't think our geoeconomic issue, I don't think it's going to be a big geoeconomic issue for the United States.